Hello everyone, this is the pre-market report video for today 31st July 2023 in the Indian stock market in terms of Nifty and Bank Nifty. First, on Thursday night, US Bureau of Economic Analysis released the US Q2 GDP growth rate. The data came as 2.4% against expectation of just 1.8%, which means US economy was growing fast and US Fed was not in any form of pressure to reduce the rate hike. Rather than now they will allow this higher interest rate for longer time as per their convenience. In addition, on Friday morning, Japanese central bank kept the interest rate unchanged. Here, that's not an issue, but now keeping the same interest rate, it's a deviation from their regular policy guidance. They made their yield curve control policy more flexible and loosened their defense on a long-term interest rate cap. This move was seen by investors that Bank of Japan was moving away from monetary stimuli. Both of this affected all the Asian stocks as well as the European stocks, mainly the company stocks that depend on US business. And that's the reason on Friday, throughout Indian IT companies was constantly under pressure. Next, regarding private bank weakness, we already discussed in detail in the last pre-market video, so I don't want to bore you by giving the same information. So basically on Friday, throughout private bank, mainly HDFC and IT stocks drags the Nifty, but Reliance supported on the positive side. Thus, it closed flat on day-to-day basis. However, on weekly basis, for the first time in the last 5 weeks, Nifty closed 0.5% negative. All other 4 weeks, it closed on the positive side. Sector-wise, Power, Realty increased 2% each, while FMCG increased 1%. On the contrary, IT dropped near 1%. In case of private banks, it's 0.5% drop, mainly saved by ICICI Bank. About institutional activity, again for the second consecutive day, FII was net sellers. The net sold for 1020 crore rupees and DAI net bought for 1635 crore rupees. That's the quick recap on Indian market, what happened on Friday. Coming to US, before their market opening, US Department of Commerce released the PC inflation data for June month. Here, multiple times we discussed PC inflation is the important one for Fed interest rate decision, not the normal consumer inflation. That PC inflation data came as just 3% against expectation of 3.1%, and it was way lower than last month 3.8%. And this is the lowest value since April 2021, almost lowest value in the last 2.5 years. Thus, on Friday, US market becomes super bullish. All the 11 major sectors in S&P 500 closed in green. So, at the end of the day, Dow Jones increased by 0.5%, S&P 500 up by 0.99% and Nasdaq rallied by 1.99%. In case of VIX, directly opposite to Thursday, it decreased by over 9% and moved below 13.5 from 14.5. Again, all this positivity increases the crude oil by 1%. On Saturday morning, WTI crude oil closed at $80.5 per barrel and Brent crude oil closed at above $84 per barrel. Coming to Indian ADR, despite the overwhelming positive close in Nasdaq, it didn't reflect on our IT stocks. All 4 ADRs closed more or less in line with Indian market. ICICI Bank only closed positive as it was in Indian market as well. About GIFT Nifty, on Saturday morning, it closed at 19,790. Equating it over spot market, it's kind of indicating the gap up opening of 30 to 50 points. So that's all about the global market. Now, before moving to the stock specific, let's look at what are all the important global items we need to keep an eye out this week that can affect the global momentum. First, on both today and tomorrow, it's Chinese PMI data. Both the days, different entity will release it. The reason why it's important is, at present, there is a general global worry that Chinese manufacturing is slowing down. So, having a good data plays a major role in global momentum and oil price. Second, today, Europe's GDP and inflation. Third, on Thursday night, Apple and Amazon will be releasing their earnings since both of them are top large US mega cap. And finally, on Friday, it's very important US jobs data and OPEC meeting. Again, those impact we can only see in the following Monday. So, these are the important items we need to keep a check that can alter the global momentum. Anyway, now let's look at the stock specific info. First, regarding quarterly results, Marico and Bank of India beat the analyst estimation, whereas SBI Cards didn't. Analysts expected Marico's net profit to increase 10.2%, but it increased 15%, but revenue missed the estimation. However, profit margin increased more than expectation. So I consider more of a positive side. Similarly, in case of Bank of India, profit increased 72% and net interest income increased 27%. Then on the negative side, year-on-year basis, SBI Card's profit fell by 5% and their net NPA increased from 0.78% a year ago to 0.89% in the last quarter. They said the main reason for their reduction in profit was due to their bad debt expense. So I consider their result as not so great. Second, as per business line at present, the FPI, foreign portfolio investors holding in Indian private banks, increased to 54% in the end of June from less than 32% in the last April end. In 1 quarter, 3 months, foreign people increased their stake by 22%. And they mainly increased in HDFC Bank. At the end of June 2023, near 64% holding of the bank was held by FPI. So it means in the 3 months, almost all the FII money went into the banking sector. So if they start to sell like last year, then it will first affect the banking stocks. But I don't see the reason why they have to sell, since other than Axis Bank, most of them were doing good. As a summary, US market closed positive, global momentum is good, and GIFT Nifty is indicating the gap up opening of 30 to 50 points. But only one worrying thing is, in the last 2 days, FII sold over 5,000 crore rupees. So if they stopped selling, banks and market might resume their positivity. Then regarding the things to look out today, Maruti Suzuki, Power Grid, Bosch, Adani Transmission, Adani Green and GAIL are the some companies shall release their earnings today. And in terms of macro, before our market opening, first Japanese retail sales and Chinese PMI data is due. Then during our market hours between 11 am to 2:30 pm, lots and lots of Europe's data such as UK housing inflation, Germany retail sales, both individual and whole, Europe's GDP and inflation etc. all are scheduled release. Then in the night, there is no important US macro that I am aware of. Coming to technical, on Friday, after a decline, Nifty managed to recover in the later part of the session. Thus, it forms a doji candlestick pattern, indicating indecisiveness between the buyers and sellers. However, this doji when it formed after a significant move up or down, often it signals the possibility of a reversal. In this case, it has been formed after a decline, so this hinting a potential upside. At present, the critical pivot zone is around 19,500 to 19,450 range. This range coincides with the 20-day exponential moving average. So, breaking below this range could lead the Nifty to drop to the 19,300. Then the resistance zone seems to be around the 19,700 to 19,800 range with a strong hurdle at 19,750 to 19,800. Breaking above this could lead to a further upside, potentially towards 19,900. Just as cautious in weekly chart, for the first time in the last 18 weeks, Nifty haven't formed a higher high formation and formed the negative crossover, which everything indicates that we are in the consolidation phase and the expected range for this consolidation is in between 19,500 to 20,000. However, on the positive side, Nifty did take the support at the previous week's low. As a conclusion, today technical indicators hinting a consolidation phase, while the doji pattern formed on last Friday signals potential upside. In case of Bank Nifty, in weekly chart, it forms an inside bar pattern. Again, it's too indicating the consolidation. Basically, it trade within the previous week range 44,700 to 46,370. Thus, that range now becomes crucial for potential breakout on either side. Then on daily chart, it forms a small bearish candle with long shadow on both sides, signaling the indecision and there is a potential for either directional move. So now the 20-day simple moving average is at 45,250. A drop below could push the Bank Nifty towards 44,700 and to 44,500. If it sustains above, then it got the potential to rally towards 45,700 to 45,900. As a conclusion, like Nifty, Bank Nifty's technical close to suggest the continuation of the consolidation phase, especially considering the inside bar pattern and the indecisive daily candle. So the 20-day simple moving average 45,250 is the critical level to watch. Moving on, about option open interest for Nifty, here the bottom one is change in open interest, where the top one is overall open interest. Lot of new call options were added in the zone 19,600 to 19,750, and the maximum call option open interest is at 19,750. After that, followed by 20,500 and 20,200. So, as per open interest analysis, 19,750 is the immediate resistance. Then the next hurdles were at 20,200 and 20,500. Regarding put option, 19,600 got the maximum put option open interest, but at the same place, significant call option also present. So the next point, 19,500 is the support to look out for. Then in case of Bank Nifty, 45,500 got the both maximum call option as well as the maximum put option open interest. So more option sellers are expecting a sideways movement. Then the next maximum call option open interest is at 46,000, where some put option unwinding also took place on Friday. So that's the resistance to break. On the put option side, the immediate support to look out for is at 45,200. Breaking that, the next one is at 45,000. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.